All right. Matt, the mortgage guy. In today's video, I'm going to talk about how to buy a house for your parents with only 5% down and owner occupied financing terms. It's a great hack that not many people know about. I thought more people did because I've done dozens of these, but apparently talking on YouTube Live, I've found that not a lot of folks know about it. So in today's video, I'm going to go over it, what the caveats are, how to get those very best terms, and other ways in which you can buy an owner-occupied property without actually occupying it. All right, Matt the Mortgage Guy here, residential mortgage broker. Happy to help you in 46 out of 50 states. If you want to get in contact with me and the team, it's really easy. Go to greatmortgagebroker.com, fill out the form, let us know where you're at, how we can help. Whether it's buying a house for parents, buying a home for yourself, or any other mortgage questions you have, reach out to us. We're more than happy to help. All right, let's get into it. Today on YouTube Live, I find out that not a lot of folks know about this. It is a great way to buy a house for your parents. You don't have to buy it like an investment property. You don't have to put 20% down. You can get owner occupied terms. And just to clarify it for folks, let's start at the beginning. There's different terms and different rates for different types of loans. There's owner occupied, there's a second home, and there's an investment property. Owner occupied, you're going to live in it. You put lower down payment, you get the very best interest rate, and that's how that works. If you buy it as a second home, meaning you're going to live there a few weeks out of the year, it's a vacation destination, and that's your second home, you can generally put 10% down on those loans, and you get not as good as terms you get on a primary residence, not quite as high as interest rates on investment property, somewhere in between, right? And that's a second home purchase. On an investment property, the big, con for a lot of folks is it requires a bigger down payment. If it's a single family house, some lenders offer 15% down. Some lenders want 20% down. To get decent terms, a lot of investors put 25% down when you're buying an investment property. Today, I want to talk to you about a way in which you can buy a home for your parents. You can buy it with the terms like it was, a primary residence, meaning you can put 5% down on a conventional loan, buy it for your parents, get the owner occupied financing. They don't have to be on the loan and you don't have to live there. You still get the terms of an owner occupied residence. And I'll read to you directly from the guidelines from Fannie Mae. And they've got in their guidelines for principal residence properties. A principal residence is a property that the borrower occupies as his or her primary residence. We know this, right? The following table describes conditions under which Fannie Mae considers a residence to be a principal residence, even though the borrower will not be occupying the property. One of these ways is children wanting to provide housing for parents. You've got aging parents. You've got parents that don't have that much income. This is the requirement. If the parent is unable to work or does not have sufficient income to qualify for a mortgage on his or her own, the child is considered the owner occupant. Easy, right? In my experience, because I've done a lot of these, it's probably a parent that has Social Security income. Sometimes it's a parent that's never worked at all in this country, right? And with not working, some of the parents that may have migrated to this country, they don't have credit history either, right? None of that matters. They don't have to be on the loan. You as the child can qualify for this mortgage on your own. You provide some documentation saying, here's the Social Security income. They can't qualify for this house that costs $450,000. And, you want to move them a mile from your house so that you can take care of them or they can take care of your kids or whatever the case may be, right? You want to move mom and dad closer. It's easy, right? And you get the benefits of the primary residence. It's really cool. And it's really that simple, right? They bring up a couple other borrower types where you wouldn't live in the home, but you could get the primary residence terms. Multiple borrowers is an obvious one, right? Where there's multiple borrowers on a loan. One of the borrowers is a non-occupying co-borrower, meaning I'm going to be on the loan, but I don't live there. Maybe your brother or your sister is buying a house and you're going to be a co-borrower, but you're not going to live there. Only one borrower needs to occupy the home. So your brother or sister has a job, has good credit, but doesn't make enough to qualify, you get on a loan as a non-occupant co-borrower, you co-sign, you get to use your income along with theirs to help them qualify for the home. You don't have to live there. They get that owner-occupant financing. The third and final way, if the child is unable to work or does not have sufficient income and they're handicapped or disabled, that is a borrower type that is eligible, right? Parents or legal guardian wanting to provide housing for their handicapped or disabled adult child, right? So that is directly from Fannie Mae guidelines. I'll put that up so everyone can see it. It's a great way to be able to provide housing for this video specifically, and for the many deals that I've done where I'm like, man, more people should know about this. I tell someone about it, they're like, oh my gosh, I can't believe this is possible. Because more often than not, I had people come to me and say, you know what? I'm trying to buy a house for my parents. I know I've got to put 20% down as an investment property. Some people have told me 25% down, I get better terms. They're looking at a $500,000 property, $100,000 down plus closing costs. Like, man, it's a lot, right? You can buy it with 5% down. You can have an owner occupied property yourself. That doesn't matter, right? As long as there's proof, and which is relatively easy. Like the ones I've done, a letter explanation saying they can't qualify. They only get Social Security income. And then you provide documentation showing the Social Security income. There it is, right? And the child qualifies for the mortgage. They're on the mortgage. Parents are going to live there, not on the mortgage, but they're the ones occupying it. Child doing that for their parents gets that owner occupied rate and term for the property. And by rate and term, I mean like the best rates and the best terms, because that's just widely known in mortgage. Owner occupied loans, primary residence loans are the best terms in the mortgage industry. So hopefully this is helpful to somebody. Reach out to us if you have any questions at all. We're more than happy to help. This is relatively straightforward type deal. It's not anything special that just we do, right? Or as a broker, I've got access to it. Nobody else does. Like this is a Fannie Mae guideline. So any lender you work with can do this. We'd be happy to help, and we'd love to help. If not, if you've got somebody, that you've been referred to or that you've been working with, and you didn't know about this and this fits your scenario, ask that loan officer, because it's just a great deal. And it's a great way to provide housing for your parents in a way that's not going to break the bank. That's the one thing that's been the hindrance for a lot of folks is the down payment. 5% down, right? You buy them a house for $400,000, 20% or 20,000 plus closing costs, and you're in the door, right? So go out there, buy your parents a house, man. All that they've done for you, raising you, putting up with all your shenanigans, the least you can do as they're aging is put them in a house, provide that housing for them like they did for you for your first 18 years, right? Hopefully this was helpful. Any questions at all? Again, greatmortgagebroker.com, fill out the form, reach out to me and the team. We're happy to help. And until next time, we gonna see.